Hello and welcome to all of you in the audience, as well as to our two panelists for today, Tina Taylor-Baker and João Reginato. It's truly our pleasure to have you with us today, and that you, João, will actually give us a keynote on stablecoins as a developer platform for financial services. After the keynote, we'll dive into the newly launched EUROC. For those who are not familiar, EUROC is Circle's euro-denominated stablecoin that launched at the end of June this year. And before we get started, I'd like to extend our thanks to all of our supporting partners and our gold partner, Ripple. So just as a heads up for anyone in the audience, we'll have a Q&A session for João's keynote right after he's finished, and then also a Q&A session after the panel discussion itself, and in which we'll then extend our questions to our panelists. In order to ask either of our panelists any questions, please use Slido either by following the QR code you can see here, or by opening Slido and typing in the number 5353, and then you'll be able to ask your questions there. You can also include the name of either Tina or João, depending on who you want to direct your question towards. Now, before João will give his keynote, I would ask you, Tiana, and João to introduce yourselves first. Maybe Tina can start.
Sure. Thank you so much to the DEA and Sarah for inviting us to join you guys today. I'm Tina Baker-Taylor, and I lead our regulatory strategy and policy in Europe and the UK. Circle is acting in partnership with our regulators and policymakers around the world to help develop practical, pragmatic and balanced regulatory frameworks for digital assets. And a big part of my job is engaging with those policymakers. So that's my role at the firm. João?
Thanks, Sarah. Thanks, team. Thanks, everyone, for having us here. So I'm João. I'm a VP of product for Circle. I've been with Circle for almost 7 years at this stage. I led the build out of US dollar coin, USDC, our first stable coin, and today I manage all of our product teams that focus in the stablecoin space, including the teams that have recently brought EUROCoin to market as well.
Great to have you both with us today. I think this will be a truly exciting topic, not just your keynote on stablecoins more in general as a development or developer platform, but also then talking about the EUROC. And yeah, the stage is all yours, João.
Awesome. All right. So let me present my screen over here. Can you guys just give me a nod that you can see my screen? Yeah. Awesome. So yeah, we have a particular view, and we have had a particular view when it comes to stablecoins from the beginning, and that view is that stablecoins can behave much more broadly beyond the bare asset side of the instrument that most people, I think, tend to focus on, something that you can hold on a digital wallet and transact. But there are quality properties about these assets that really make them potentially behave more as a platform for the build out of hopefully better financial services and use cases. So that's what I'm going to talk about today. I've been talking to my team, to teams at Circle, and to the developer and ecosystems that we interact with about this idea that we have had, as humans, we have had the benefit of having the advent of the internet over the last 30 years or so, and that has introduced a lot of fantastic innovation in terms of how we communicate, how we inform ourselves, how we engage with our counterparts around the world in a much more seamless way. And the internet has created a lot of this idea of APIs, right? Programmable ways of accessing all this vast amount of information and communications infrastructure. What we have lacked, though, in the last 3 decades or so is the propagation of that to money, right? Because I think this is an old topic, but most of our financial services and the way they work today continues to be built on top of 20th century infrastructure. None of it is actually fully digital. Most of it actually stops during weekends and outside traditional working hours. And we have fallen behind tremendously from an innovation and potential point of view in terms of what we have seen compared, as I said, to the evolution of how communication and media has evolved over the internet. So we talk about this idea that we owe it to the internet, we owe it to the world to create this idea of an Uber Money API that runs on internet rails, so that for developers, for businesses around the world trying to build on top of 21st century infrastructure, that they have the same amount of capabilities and access that other sectors of business activity running on internet infrastructure have today. And we believe that we have been evolving a lot in this direction in the last number of years, and the evolution of blockchain technology has certainly contributed tremendously to this direction. And we believe in particular stablecoins are the best answer that we have today to creating this money API that runs on the internet. So let's talk a little bit more about that. First of all, I would like to talk about this idea of the myth of the infrastructure phase. This is the thesis that two folks at USV, the venture capital, have written, I think, circa 2017. They're Danny Grant and Nick Grossman. You can look for them on the internet and you will find a super interesting article. But it's this idea that typically when it comes to technology, application development inspires infrastructure, and then infrastructure tends to follow in terms of development to enable applications. So what happens is developers and businesses, they have a vision, they attempt to do something, they build applications, and then they realize that there's actually real limitations to the infrastructure in attempting to do what they want to do. And that a lot of those teams traditionally, they have then turned their attention to building infrastructure to enable the things they want to build. And the evolution of that infrastructure then not only allows them to build what they wanted, but actually introduces innovation to do a lot of new things as well. We think actually, funny enough, we sort of followed that when as a company at Circle, when we ended up building USDC. And here are just a couple of examples of how the development of some applications eventually inspired infrastructure, which then enabled new things. And I think USDC, when it was developed along those lenses. Prior to building a stablecoin infrastructure like USDC in circa 2017, Circle was focused on retail applications. We were building peer-to-peer payments products and other retail products to bring the benefits of blockchain and crypto assets to masses, right? To use cases where we could, through good user experience, reduce the friction that typically is involved in that technology, but still bring the benefits. And we built peer-to-peer payments use cases and others on top of infrastructure like Bitcoin, and it quite didn't work. It quite didn't scale and performed to the extent that we thought it could around that time. That attracted us to Ethereum, which was the first non-Bitcoin blockchain at the time. The idea of creating your own token, creating your own asset, programmability, and eventually we landed on this idea of stablecoins. But we then kind of followed this transition, and that's why I like this analogy. We were building retail apps, we were building applications, and we realized that we were hitting some constraints in terms of the infrastructure. We switched over to building infrastructure. Funny enough, we never went back to rebuilding those retail applications on top of that new infrastructure. So the rest is history. But I think it's an interesting evolution that tends to happen, and I think it has been happening again with crypto in the last number of years. So because of that vision that we have had from the beginning, that stablecoins were something that we wanted to build to enable the application development that we first were interested in, we always have had this platform or developer focus to what we did initially with the build out of USDC. So we built the asset, but I think the most interesting thing that happened was not really that we built the asset. We followed very quickly with building this idea of stablecoin APIs. And we built tools for developers so that they could benefit from the infrastructure that Circle had at its disposal. Primarily this idea of automatically converting dollars into USDC and back. And those APIs, they were very successful over the last number of years. And very early on, we had some customers like Dapper Labs that I don't know if many of you know, but Dapper Labs, they have a digital wallet experience called the Dapper Wallet, and they are the creators of popular blockchain-based games like CryptoKitties and more recently NBA Top Shot. Dharma was another company that utilized our APIs very early on. Dharma eventually was sold to OpenSea, was incorporated by OpenSea, and FTX also utilized our APIs early on. And the reason why I used all of those examples was because those were all companies that did not utilize Circle's infrastructure, stablecoins, APIs, and USDC just as one more asset that they had in their potentially crypto capital markets use case. No, these use cases, they were all more financial services in nature, and they utilize USDC as a platform, as an implementation piece of infrastructure. If any of you ever use a game like the NBA Top Shot, you'll realize that you might actually use it and not come across USDC as a term, not come across that as a concept that you need to master. Similarly for how the Dharma wallet used to use, and similar for how FTX has built their experience in that you can transfer your dollars to FTX and they hold a dollar-denominated balance for you. They don't necessarily tell you that that's USDC behind the scenes. So really, these are examples of people using USDC and our stablecoin APIs as a platform. So then what happened is as these pieces of infrastructure that we're putting together continue to evolve, we really think that assets like USDC and EUROC, they behave like these on-chain money APIs. They are global, they're very liquid, and we keep working so that they continue to be liquid. They are trusted. So they have the quality properties that are required for developers and businesses to build on top of them. And as I said, what that allows businesses to do is to focus on the user experience, hopefully abstract away the fact that these are digital assets, and just think of them as a way to store, transact, exchange, trade dollar or fiat denominated assets on blockchain infrastructure. So just so that you guys don't trust me, but just trust the numbers a little bit more. So focusing a little bit on USDC for now, but we have a great track record of the promise of stability for an asset like USDC, which is the main point of existence. We hold one-to-one reserves for the USDC tokens in circulation. As of right now, we have around about $54 billion worth of USDC out in circulation in the various ecosystems where it is supported. This has represented over 5,000% growth since about 2 years ago, which is really insane. Over 190 countries represented in how the asset is transacted, and developers and businesses utilize and build on top of that. And we have always focused a lot on this idea that if you are to be a platform, you have to be trusted, right? Developers are not going to pick Amazon Web Services or Google Cloud lightly. They want to build for decades to come, and so trust is super important if you want to behave like a platform. So we have all those characteristics that we are proud of from a trust point of view. Particularly, I think the one that I will focus on is just the redeemability. USDC is the most redeemable stablecoin. It has over $125 billion worth of stablecoin has been redeemed through our systems just in the form of dollars for USDC. It already has achieved a tremendously broad ecosystem. It is still, reasonably constrained to crypto capital markets use cases, but it is growing a lot. So we are supported on natively on eight separate ecosystems: Ethereum, Solana, Tron, Avalanche, Algorand, Stellar, Flow, and Hedera blockchains. But not natively in a non-official way. It's actually supported in over 30 blockchain ecosystems, over 200 digital wallets, 180 exchange platforms. So it is one of the most broadly adopted assets and therefore platform in the world right now. And as I said, a little bit more on the mainstream side of things, it is beginning to be adopted, even though this is traditionally always going to be a little bit more slow moving. But we have companies like Stripe beginning to intertwine USDC as part of their infrastructure in the way that they offer marketplace payouts in the form of USDC now. Visa and MasterCard considering utilizing USDC as part of a currency on their settlement networks. MoneyGram beginning to consider that for remittance use cases as well. One of the things that we're super proud of, and again, it has to do with this idea of building a platform and not only an asset, is the fact that we have built a tremendously robust infrastructure to support the core primitives of this asset. So all of our issuance and redemption flows are completely automated. They run on a 24/7 basis. They don't stop. And when customers send fiat or dollars or euros these days with EUROCoin as well, the issuance, the conversion, or the creation of the digital parallel to the asset happens in a matter of minutes and in a completely automated way. So really focusing on automated use cases that come with platform perspective. Again, a few other numbers, and this slide is getting out of date now because it's as of April. But just so you guys have an idea of the volume that we perform for our business customers, just in the month of April, we have averaged about $390 million issued a day and $465 million redeemed a day. April was a particular month that had more of a contraction in the supply. Typically, this is a little bit more obviously biased on the issuance side, but it's tremendously large for that kind of asset today. Oh, I think I might have skipped a slide, but I think we'll get going in the interest of time. Now, let's talk a little bit about EUROCoin then. So as I like to say, we're building on the shoulders of a giant. EUROCoin is the first foray into Circle expanding the idea of stablecoin platforms and moving into more than one fiat currency supported. This is tremendously important, again, if we want to think about the idea of a platform. The world doesn't run on dollars. The crypto worlds might run a little bit more on dollars than traditional financial worlds, but obviously this doesn't suffice. We have to continue to bring these benefits to other regions, and Euro and the European region seem to be the obvious one for us to focus on next. We have launched EUROCoin at the last day of June, so basically July this year, and it follows exactly the same principles of USDC. So it runs on exactly the same infrastructure, and it uses the same parameters for trust and transparency. It leverages the same network for distribution and for liquidity, and obviously we don't anticipate it being as large a platform as an asset as USDC in the near future. Eventually, it should become significant in size as well. But as you can see from the profile of growth, we are on a good trajectory, and we believe EUROCoin will very soon become the largest euro-based stablecoin in the world as well. The call to action that I always invite, particularly developer audiences, to think about is that if they're building a financial services product or application, and or even if it's not necessarily a financial service product, if it is sometimes a product that just needs money as a building block, right? And there are so many today, right? If you utilize Uber, you have a digital wallet in there, even though most people don't think about it. If you use Airbnb, you have a digital wallet in there, even though you don't think about it. There are so many needs for these core primitives of storing money, transacting, even beyond financial services use cases. If you as a developer, as a business, you are thinking about building something or thinking about improving the way that service works, and you're not considering stablecoins as one of the potential platform alternatives, you're not considering crypto and blockchain infrastructure, you should really consider why that is. Obviously, I think we'll talk about it. The lack of more clarity from a regulatory point of view is still one of the key detractors for this becoming more broad. But from all the other quality properties that a platform needs in this space, it's really compelling, the alternative that we are building collectively as an industry here. So I would invite every developer and every business owner to really consider this as an alternative. And that's what I had to talk about today. Looking forward to the questions and the panel subsequently.
Great. Thank you so much. I think that was a very comprehensive overview and definitely answered why a money API might make sense. Just on the last note that you touched on, that you're particularly targeting developers, is there any type of workshop or a traineeship that Circle actually offers that people can reach out to or look into if they're interested?
Yes, we have a couple of things I would mention. We have, if you go to circle.com, you will find a tremendous amount of resources for developers. We have developers.circle.com with a lot of documentation. We have a sandbox that developers can use. It's really simple to create an account and start playing with a lot of this infrastructure. And we have a team that is always super interested in supporting developers as well. So invite folks to utilize those channels that they find on circle.com to reach out. And also I'll do a bit of a pitch here. Circle is running its first ecosystem developer conference called Converge at the end of September in San Francisco. There are more information on the website. I'm sure we're going to talk about it again later today. But it's a unique opportunity for developers also around the world to come to the conference and to learn both from people who are building on top of this type of platform. But then on the conference, we will have a unique track for developers, and there will be a lot of educational material there as well.
All right. Good to know, especially for those of the audience that are actually residing in the US, I guess. And that being said, let's move on to the audience questions, which there are a couple of. The first one is regarding the backing structure of EUROC, especially because we know that Circle's first transparency report on the backing of the USDC was just published. And we also know, of course, that it's the goal to publish daily transparency reports. So what's that like? What are the plans like for the EUROC here?
Yeah, EUROCoin follows, as I said, the benefit of doing it the second time is that you learn and you learn a lot and you build on top of what you have already done. So EUROCoin follows exactly the same reconciliation and attestation procedures that we have for USDC. We work with the same partner in Grant Thornton as the auditing firm that provides those services for us. The same data infrastructure, the same, obviously from a banking partnership point of view, it might differ. We have issued already the first report for EUROCoin. The second one is coming real soon, now that the month of July has closed. And we are working, and my team is actually part of building that out. We are working towards moving from a monthly attestation kind of control to, as much as possible, a daily one. Now, this is something that takes a while because these assets, particularly USDC, they're really, really large. So we're talking about tremendous sums of data that we need to reconcile on a monthly basis. But we are completely reorganizing our infrastructure to be able to do that, probably beginning on a weekly basis and then moving on to a daily basis. And we hope to do that before the end of this year.
Okay, so there's even a time roadmap attached to this plan. That's good to know. And the next question is also going into that direction of backing. So it's fully backed and then pegged to the euro, of course, instead of the US dollar. But what does the backing consist of? So is it similar to the US DC, where we have short-term, obviously they're not US government bonds, but bonds and dollar or euro cash reserves then, or what's that like?
The euro reserves are a little bit simpler to begin with, also because honestly the scale of the reserves are not that significant right now. As I said, I think we have just over 5 million euro in circulating supply right now. You are right. So the composition of the USDC reserves is essentially a combination of cash reserves and short-term bonds. The composition of the EUROCoin reserves right now are completely cash based, so it's purely euro on cash accounts.
All right, got it. Tina, if you have anything to add, by the way, of course, these questions are mostly directed towards Joao after his keynote, but feel free to jump in at any point too.
Sure, I would just add that on the euro reserves, the you mentioned that they were pegged. I think one of the significant differentiators for Eurocoin versus some of the other existing euro-denominated coins are that the reserves are actually held in euros. So any of that potential FX slippage that might occur in another euro-denominated coin does not exist within Eurocoin because it is 1-for-1 to an actual euro.
I see. So we actually have to differentiate in terms of the phrasing here when it comes to peg versus euro denominated. All right.
Yeah, so a peg is a reference, right? So your reference
Right.
a denominated currency. Ours are actually 1-to-1 backed by euros.
Makes sense. All right, coming back to the topic of stablecoins as a money API, where would you say is the advantage of using EUROC over USDC? Is there such a thing as a competition amongst those two, or would you say they're for different purposes? Also, from the perspective of the US dollar, as you said, Joao, being a bit more predominant, especially in crypto.
Yeah, look, the way that I think about that is twofold. So first, let me compare a little bit an infrastructure like USDC to normal dollars, right? So I have had the experience of building financial services and products that actually have to deal with proper real world fiat currencies, and the way that you represent, in a way, I have an engineering background, so I always think about money as technology as well, right? The way that you think about money is you have to be able to store. It's a little bit like thinking about data. You have to be able to store it. You have to be able to secure it. You have to be able to move it around. And the way that you achieve those things with traditional infrastructure is, there are only certain companies that are allowed to store money in traditional form, and those are banks, right? So you have to have some sort of banking related infrastructure to be able to store fiat currencies. So as a company building products in that space, if you're not a bank, you have to have a relationship with the bank. You have to write code against banking APIs, which tend to be, not great. If you're interested in securing funds, you are going to have particular types of infrastructure and vendors for that. If you're interested in moving funds, maybe you're going to have to write code against payment service providers and those sorts of infrastructures. And as I said, those unfortunately are mostly based on 20th century technology, right? So they typically don't work on the weekends. They're very, very poor when it comes to thinking beyond a particular jurisdiction. So now if you have to transact and send those funds across borders, well, then you're a little bit in trouble, because that's going to be tremendously costly and slow moving. Now, if you think about representing all of those primitives as an application developer in this new form of technology, then it's very easy, and I can download hundreds of different alternatives of custody pieces of technology that most of them are free to use and open source, reasonably secure after about a decade or so of testing, to store these kinds of assets that are that represent fiat currencies just as well. Again, from a transaction point of view, there are so many vendors and so many bits of technology that, again, most of them are free, permissionless to use, that a developer could use today. And then when you talk about particularly about global use cases, it's tremendously easy and much cheaper and much faster to transact on this kind of infrastructure. But I think the way that then on the second part of your question, on the audience's question, USDC versus Eurocoin, I think eventually for depending on the type of business that needs to be built, you need all of these currencies, right? So if you're trying to build global commerce, right, where we're going to maybe accept payments from a US-based consumer base or an European consumer base, you're going to have to deal with dollars and deal with euros. So having this type of infrastructure support at least those two currencies is tremendously interesting. You can accept different types of currencies, choose the one that you want to receive settlement on. There's already, again, permissionless infrastructure that many people, not only Circle, many people are building on top of this, that allows you to do FX across these two currencies. So it makes complete sense to use more than one and to continue to use them as we build more of them out.
Yeah, that makes perfect sense. I mean, thinking back of the example that you gave during your keynote, if you look at Airbnb, it's not just Airbnb in general. They have different offices and headquarters, and have to deal with different taxation authorities as well around the world. And it only makes sense to then have also currency specific ways of settlement and payment going on. And that actually leads into the next question, the next audience question, and it's regarding market in crypto asset regulations. So in Europe, so how will Circle proceed with regulation for the EUROC is kind of the question, or how do you, if it's more of a bystanding, observing position that you might take on, then how are you planning on reacting to MiCA?
Tina, I think this one is for you.
Okay, sure. Yeah, I can take this one. So in general, as I mentioned when we kicked off, Circle has a very keen interest in the development of transparent, well-regulated digital asset markets. And we think that's imperative for capital formation, maintaining efficient transactions, and consumer protections. And for us, we believe that the partnership between public and private sectors is really critical to develop that technology neutral, principle-based regulation. I think that one of the key issues that we have had is, a lack of harmonization. And so Europe setting this harmonized policy and a regulatory standard for something as fundamental as the future of crypto assets in the third largest economic zone in the world is a really significant milestone. So with the advent of MiCA, which in the next 2 years will implement an end-to-end holistic regulatory framework for digital assets in Europe, and we haven't had that really anywhere, will provide regulatory clarity and a really clear regulated path for innovators across 27 different member states, and importantly, passporting rights between those countries for innovators and builders to market and operate their business. And I think that's going to be a game changer. So from a Circle perspective, we obviously plan to continue to invest and grow our presence in Europe, and to help build out this responsible, MiCA conforming crypto asset economy. And when available to us, we also aim to make EUROCoin a MiCA conforming digital currency. So it doesn't exist today. We're still, 24 or so months out from that regulation coming into implementation. So within this context, I think if you imagine a future where you have a privately issued stablecoin that conforms to regulations, that can support Visa level transaction throughput, Visa level uptimes, cyber and risk resilience, that payment system we think is coming. And we believe that this is the reason that, big companies like Visa and WorldPay, are investing in enabling crypto, and investing and enabling companies like Circle, because they see this future driven by these payment optionalities that a well-regulated stablecoin would enable. So ultimately, we're quite excited about MiCA, and we think that it will be transformational for the industry and provide Europe potentially with a first mover advantage around a really holistic regulatory framework.
Yeah, the first mover advantage also, of course, comes into play if you look at current market capitalization of other euro-denominated stablecoins. So that's, definitely an important topic. I can see that. So these were the questions that were extended from the audience for the keynote portion, and we'll make sure to extend more to you after the panel discussion itself. And some of the audience questions already touched on the questions we're going to ask, so we'll adjust them accordingly. But right off the bat now, can you elaborate a bit on the growth projections for EUROC in the next couple of months? I mean, we've seen kind of where you got with USDC within a year, for example, how big the growth was. And then you already touched on MiCA on the regulatory side of things.
So I can touch on the growth part. It's always very hard to come up with actual numbers, right? So I'm not going to share any actual numbers here, but I will share how we see growth happening, because the interesting thing that I think we are learning, and we have learned with the build out of EUROCoin, is that every time you do this, obviously the context is different, and the use cases are different as well. The more it has network effects, right? So the more currencies you incorporate into this kind of infrastructure, the more use cases are enabled. So when USDC was launched, it was launched into a particular crypto capital markets context, right? There was a lot of demand for alternative dollar stablecoins at the time in 2018 when we launched, and I think we hit product market fit really quickly with USDC because of that demand for something that was really trusted and regulated and coming out of the US. I think the partnership that we have established, for example, with Coinbase, really subsequent to launching, was a demonstration of that core companies within that crypto industry, they were actively looking for a trusted alternative. So I think USDC benefited from that almost immediate, as I said, product market fit, and it grew really quickly. And then it started broadening a little bit its use cases more in the second half of its existence, right? When we started having, as Tina mentioned, companies like Visa, more recently WorldPay, Stripe, really interested in the growth of USDC and how they can run some mainstream use cases over this. EUROCoin has proven to be slightly different. EUROCoin has already landed with a much more mainstream perspective to it. So the demand that we have been seeing is already riding that more mainstream adoption wave. What I mean by that is these large scale companies and financial institutions and payment processing providers, they welcome tremendously the introduction of EUROCoin, because obviously all of them tend to be not US centric companies. They tend to have more of a global presence, and even if they don't have a completely global presence, the U.S. markets and the European markets to them tend to be almost comparable in size and importance for them, right? So all of them are really interested in expanding the infrastructure that they have begun to establish, connecting to USDC, also for EUROCoin. On crypto capital markets, I think there is going to be demand. I mean, there was a study, I think, published by Chainalysis, I think at the end of 2021, indicating that actually Europe was the fastest growing region from a retail adoption of DeFi, decentralized finance services. So I think European customers are definitely interested in continuing to experiment with these crypto-based financial services, and most likely they are not as interested in holding balances, in a dollar-denominated fashion. They do it because honestly, it's the most liquid and appropriate way to on-ramp into those services. But if you receive your income in euros, and if your expenses are all euro-denominated, and you're also playing in this new innovative financial services space based on crypto, you're very likely to be willing to hold euro-denominated balances in cryptographic form, right? So what we see is a lot of demand from European-centric crypto capital markets venues to deliver to the European customer base in the same way that USDC delivered to a global customer base. We have seen a little bit of a slow start, but I think we have so many things to announce in terms of centralized crypto exchanges adoption in the next 2 months. There will be so many that will be announced. They're all, we have been mindful because this has been a very busy time for the crypto industry in general, coming out of a couple of crises in the first 2 quarters and a bear market. So introducing this kind of capability into everybody's roadmaps has taken a little bit of time. But as I said, before the end of the year, we will see broad adoption of EUROCoin, at least within the crypto industry for the main crypto capital markets, probably just as broadly as we see USDC today. and we anticipate tremendous amount of growth for EUROCoin within that space. But as I said, we have seen so much demand from commerce use cases and FX based use cases now that USDC can be put side by side with EUROCoin, and I think that will contribute to, in terms of mainstream growth, perhaps much more quickly than what we have seen for USDC in the past.
Yeah, I think the only thing that I would add to that is that, if we're looking at EUROC today being, primarily an institutional innovation and a key trading pair for USDC, that is true. But, how and where is the retail market going to develop? And I think that as cryptocurrency in general, the industry matures just beyond, mining and trading into the next generation of payments and commerce, this idea of a fully collateralized, transparent, reserved stablecoin starts to come into its own as a critical payments tool. And so, you may have skeptics that would argue that the payments network in Europe already works quite well today. And so what do we need this for? But the payments network today enables, the traditional payments infrastructure. And so as we're starting to see more merchant acquisition come online with the likes of, as João said, Stripe, MasterCard, WorldPay being a few examples, what we're now doing is creating that bridge between, digitally native payments and digitally native, Web3 type applications, being able to transact with digitally native money. And I think that is different, right? There is still some friction today, taking your, bank account money, converting it into digital money, and then being able to use that within these services online, whether they're financial or entertainment. There is a wide, there's a number of applications where having that digitally native money for payment usage becomes, materially critical, I think, as well as time goes on. So I think when we evaluate the payments use case in Europe, we can't necessarily look at the payments arrangements or the payment infrastructure of today. We need to kind of look further out and understand how people are going to transact in the future.
Thank you both so much. One thing that you touched on was also the bear market, which is when EUROC launched essentially, but it just goes to show that this idea of a money API is separate from the bear market, which is what we've always seen, where in the bear market we build that whole idea. Certainly true. I mean, even if now you have Converge coming up later this year, it's kind of unbothered from that entire fact that I find very, very interesting as a development and to observe here. So let's move on to the next question, which is relating to how does EUROC fit into the landscape of existing euro-denominated stablecoins? Do you see the strong points, especially with the transparency, with it being backed one-to-one?
Well, one of the things I mentioned earlier was that EUROCoin is backed one-to-one with euros, not with dollars. So there isn't, that FX exposure potentially. So I think that's a key differentiator. And I think the other primary key differentiator for EUROCoin is that it is, the second in a product suite of digital currencies that are offered by a company that has established, a relationship of trust and transparency and accountability from a company that is, pro-regulation in our approach. And all of those things have contributed to USDC becoming the world's, fourth largest digital asset in circulation today, and have helped to secure kind of the dollar's place as the currency of the internet. Now, do we think that the dollar should be the only currency of the internet? No, I don't think that's true. And so as we look to the fact that most stablecoins have been pegged against the dollar, that they're by default, maybe intentionally or unintentionally, as Zhao meant, alluded to earlier, that they're in essence making the dollar the currency of the internet, right? And this actually kind of serves to protect and preserve the two-tier banking system as opposed to competing with it, right? And providing an alternative. So, offering a well-regulated euro-backed digital currency like EUROCoin, for us seems like a key pillar for responsible financial services innovation that, becomes that infrastructure that you can build on. And as Jean mentioned earlier, I also don't see, the two currencies in competition necessarily. They're serving different markets and the global movement of money. Different markets would prefer to use their local currency as opposed to being, exposed to those FX conditions. And really, just as the dollar props up trillions of dollars of other economic activity, a stable coin that, has that trust and accountability, and, sits within a regulatory perimeter, can really kind of provide that same function that, the dollar does today within the digital asset world. And so, where you have responsible stable coins, you can then support a whole host of other economic activities on top of that.
What I would add to what Tina said is that also I think something that I touched on the keynote, the infrastructure that Circle has built for USDC is really unparalleled in terms of the automation and the liquidity provided by issuance and redemption services. It is unbounded, to the extent that customers send us fiat currency, they will receive the comparable amount of digital currency. And as I said, with fully automated systems, EUROCoin has inherited all of that infrastructure, and it's also therefore unparalleled. There's no other currency that can be issued at that scale.
Right. So there's not really another issue out there that has built the same track record over the past years as USDC and Circle has in those terms. So could you shed a bit more light on this? And you've already touched on this partially, on the future of Europe envisioned within the Eurozone and then outside of the Eurozone, because there's this whole notion of the borderlessness of money and digital payments. But of course, we are going to have to look at regulation here. And this is, of course, also circling back to MiCA and every other type of regulatory framework that will come up in the future.
Yeah, sure. Go ahead.
Go on. No, go on. I can follow.
Okay. So I think when we look at, why EUROC and what is it going to provide, I think one of the key things for me, we talked about, this period of tumultuousness that we've experienced in the digital asset markets lately, have kind of serve to provide a ad hoc stress test, if you will. And so one of the outcomes of that is that there is proof how sound business models and a regulated approach can prevail. And for me, this correction period and the acknowledgement that stablecoins are in fact not all created equally opens the door for other use cases to expand. Now that we kind of understand what a fully reserved, fully transparent backed stablecoin can offer in light of the alternatives. So one stat I found really interesting that came out of Gartner research last year, December or January, was that they predict that by 2024, 20% of all businesses will use digital currencies for payments. And I thought that was astounding, right? So when I look at how digital currencies are rapidly evolving across global payments and remittances, I, can give you a practical example today. And one of those is MoneyGram. So earlier, Joao mentioned the partnership between MoneyGram and the Stellar Foundation. And I think this is a great example of how internet ready money is really kind of changing global remittances. So this is applicable in the Eurozone and outside of the Eurozone. Given that the partnership enables digital wallets that are connected to the Stellar network to access MoneyGram's global retail platform. And so it, in essence, is providing a bridge for consumers between digital assets and local currencies. And it's revolutionizing those settlement flows by providing this near instant settlement in USDC. And, in the future, there's no reason that could not include EUROC as well. So for a consumer, to be able to seamlessly convert USDC to cash or cash to USDC is pretty life-changing, given the utility and the liquidity of being able to use their digital wallets. And it also, for MoneyGram, kind of revolutionizes the settlement process. So for the first time, settlement can occur in basically near real time. And that's a major game changer. And this will rapidly accelerate the collection of funds and improves efficiencies. So that is a use case that is in practice today, that is now allowing people to kind of, transact in and out of currencies and digital assets all around the world.
Yeah, I would love to pepper what Tina said, which is spot on, with a couple of other examples that have crossed my virtual desk these days. In the last number of weeks, as we have launched EUROCoin and have engaged with the ecosystem to supply for the interest, for the adoption that we see demanded. A couple of examples, both within the Eurozone and outside of the Eurozone, as you said. So within the Eurozone, we have seen two things already happening, which mimic use cases that we have seen that I think are super interesting for USDC, that make a lot of sense, as Tina said. When you have the local currency available, people tend to immediately consider that as the best option. One of them has to do with capital formation. So there is now tremendous amount of startups and businesses being built, around this sort of technology innovation, blockchain and crypto assets. So they are not only digitally native, but from a money point of view, they have a bias towards this format of money as well. And in the venture capital industry and angel investment, there is a lot of utilization of stablecoins as a vehicle for capital formation. So if you are a startup, if you have a team of 3 people and you're starting up and you're collecting maybe some angel investment, there's a high chance that you're going to get paid, that investment paid onto a digital wallet in the form of USDC. The scale of that is, I think it's quite impressive, and I think it hasn't have coverage from the media in the way that it deserves, perhaps. Obviously, when we launched EUROCoin, immediately we have been approached by a number of venture capital and funds and even startups saying, oh, I am based out of Europe. So now that we have something like EUROCoin, it makes sense for us to follow the same path. But obviously, I would prefer to hold my capital in the form of euros because this is the region that I'm in. Similarly, then for payroll. So we see a lot of these digital native companies that are building these crypto capital markets venues that run fully on chain. Again, these companies are very biased in the positive sense of the term to this kind of form factor of money, right? So they tend to pay their employees traditionally in the form of USDC. But we know a lot of these teams that are, again, 100% based in Europe. And immediately once we launched EUROCoin, they said, oh, we would like to convert now, paying our employees into euros, because typically what they do is they receive USDC and they try to auto convert into euros because that's how they pay their expenses, right? And this is a form for them not to have to auto convert and not have exposure to FX. So that's a few things that are small in scale, but I think over time they become very relevant that we see within Eurozone. And the other example that I would throw that then gets talks about the importance of having this sort of asset outside of the Eurozone is that we have been approached by a couple of venues in Turkey as soon as we launched EUROCoin, because of the interest that both retail but also institutions over there have in having euro exposure, right? As you guys know, that corridor, Turkey, Germany in particular, is very, very relevant for remittances and for flows in general. And we see demand from Turkish-based businesses to also hold EUROCoin on behalf of their customers, whether they are retail or businesses.
I think that was a very comprehensive overview. I especially like that you actually used concrete examples here, which is also, so you mentioned MoneyGram, then angel investors, VCs, remittance payments that are, more favorable if they are actually euro denominated. So a lot of these are carryovers from what you've seen with the USDC. Is there anything that you would say is particular to EUROC that you've seen thus far in terms of adoption, or is it more or less the same as for the USDC, just euro denominated?
I think it's more of the same, just now with the ability to be localized and having that additional friction of a foreign currency removed. The one thing I would mention, and it's not specific about Europe, but I think it's specific about the fact that now you have at least 2 of these currencies, is everything that touches the conversion between those, right? So I am very, very interested in how this kind of infrastructure now over time will disrupt the way that foreign exchange has been traditionally dealt with. There are very few companies that hold control over broad and scaled exchange of foreign currencies. And again, thinking about this as a platform, if I am an application developer, if I am a business, to gain access to foreign exchange is actually very hard. If I want to do that at reasonable cost and scale. What we have seen that, again, almost the second, even prior to launching EUROCoin, was a lot of interest in developers and innovators who are trying to build FX as an on-chain capability, right? Again, as pure software that runs on-chain on a 24/7 basis, and it's only limited by the working capital that liquidity providers are willing to allocate to those markets. We see tremendous amount of interest, from liquidity providers to allocate capital and create a new source of revenue for them by providing liquidity into these protocols. And I think this idea of having FX become almost like a data exchange format that now runs on chain in the form of unstoppable protocols. I think it's really, really interesting. And then the application of that for commerce use cases, for remittances and everything that requires FX is a huge promise that we're seeing ahead of us.
All right. If there's nothing to add from your side, Tina, I think we can get started with the audience questions, which there is quite a couple of, and some of them are going into the same direction. So I'll start with the ones touching on the topic of GDPR compliance and security from a consumer standpoint. One question is whether EUROC will send data under the standard contract clauses to the US, or if you see any GDPR problem related to this coming up.
Well, the way that customers are onboarded, they go through the same circle account process. So our European-based customers go through the same onboarding process that all of our global customers go through. And within those terms and conditions, there are the necessary, triggers to be able to, share your information cross-border. So I don't think there's really any major change between the way that EUROCoin customers are onboarded versus a USDC customer that is outside the US is onboarded. It's the same.
All right, I think that answered the question very well. Now, the next one is related to something that you referred to. So you pointed out that a use case for EUROC is to accept payment from European commerce and companies. However, you're based in the UK currently. Is there some type of handicap that can come up here with all that going back and forth and switching between currencies?
Sorry. We're not based, I mean, we do have people in the UK. We do have, lines of business in the UK, but I think can you maybe ask the question again? I'm not sure I understand.
I think what the person means is that one of the use cases of EUROC is to accept payments from European commerce, and now with the UK leaving the Eurozone, whether this means it's some type of handicap because it's not within the European payment unit anymore in that sense, or well, it never was, right? But now we even have the burden of more regulation coming up.
Yeah, so I think that those cross-border challenges that exist with TradFi are the same at the moment with digital currency. So at the moment you've got an FX between a euro denominated transaction and a sterling denominated transaction, or a US denominated transaction, right? And so, do we potentially see a world where we expand into other currencies for other digital currencies with other denominated assets? Potentially. And so then that kind of doesn't remove, but doesn't erase, but does remove some of the friction that you would have between transacting from the UK to Europe. But again, I don't see this being kind of a material issue related specifically to digital assets today. I think it falls into that same bucket that Joao was talking about the existing challenges in FX. Joao, I don't know if you want to add anything to that.
Yeah, that's what I was thinking as well. Also, I think the way to think about this is that what Circle does, if a business or a developer is interested in, right, because they can also get access to this kind of capability, as I said, mostly in a permissionless way, perhaps via other venues and perhaps even via on-chain venues. So now USDC and Eurocoin exist as an asset in a programmable way on chain. So the conversion between the two, the acceptance of payments from one party to another party, perhaps a merchant, this can be built without Circle being involved at all. So none of those potential limitations are actually concrete limitations at all. The other way that businesses and developers can run or implement these kinds of services, I think we're talking about primarily commerce use cases. Circle has products and services in the form of merchant services and APIs that can be offered to businesses attempting to do that. Circle offers those services mostly out of our US based entities, and these are all digital assets. We support USDC and Eurocoin in the same way that we actually support acceptance of Bitcoin or Ethereum-based payments with settlement into typically something like USDC. So this doesn't actually have limitations in the way that I think has been asked.
I think that was very important for you guys to comment on, because we actually got quite a couple of questions that are referring to the conversion from EUROC to local currency. So that didn't seem to be too clear to people that this is not necessarily something that Circle or EUROC from your side that you're involved with necessarily, but rather something on the side of the merchant that then has to convert that currency. Now, another question is relating to yield programs and EUROC. Are you planning on having any EUROC yield programs?
Yes, we have the intention to expand the yield products that we have created for businesses in the form of USDC, expanding that to Eurocoin over time as well. That will likely take time because for people to understand, and I think this has been a particularly hot topic in the first 2 quarters of this year in the digital assets markets. The yield comes from aggregating the deposits from businesses who are interested in accruing yield on their balances, right, and lending that out to lenders who then supply for the borrowing demand on the other side. So it's essentially a marketplace style of infrastructure, right? So essentially, for you to be able to develop products that can generate yield based on Eurocoin balances, there needs to be a demand for Eurocoin borrowing first, and quite frankly, right now the demand for that is too small to warrant the build out of a yield generating product. We hope that that changes over time. We hope that, Eurocoin becomes, as I said, just as liquid an asset as USDC, and there will be interest potentially within the European region for businesses and individuals to borrow Eurocoin for various types of activities. And once that demand gets created, it creates a market for yield naturally on the back of that.
All right, got it. Now, the next question, I think, is from either a crypto proponent or somebody that likes to ask a couple of critical questions, rather. Let me give you a bit of background on this. So assuming that the European Central Bank, because they have asserted opinions or they have commented on the future of stable coins, and they are more critical, let's say, when it comes to their position in terms of that they actually want to have stable coins and e-money tokens on their watch and under their regulation specifically. So how does Circle see this issue of stable coins like the EUROC then being issued by a private entity, and then depending on how the central bank might react to stable coins by a private entity company?
Yeah, sure. So I think we have a pretty clear understanding around Europe's position on stablecoins now that MiCA has been adopted, and we are still waiting to see what the final law looks like after the technical trilogues that are being undertaken this month. But in essence, we do have a pretty clear distinction between e-money and asset referenced tokens, right? And so USDC or Eurocoin would fit into that e-money category. And some of the responses or some of the concerns that were originally raised that, have now resulted in transaction caps, for example, those are applied to the asset referenced tokens, but they're not applied to e-money. Now, I think over time there could be, the potential for maybe more strict oversight if those stablecoin payment systems were, seen to become systemic, for example. But today, that is what we're expecting MiCA to say. Now, the regulator of choice being, the EBA within the MiCA articles, essentially for us fits very neatly within the way that we think that a fully reserved digital currency should be regulated. So that prudential regulation that provides things like, for example, there are discussions in the US around different legislative bills that give the provision to a fully reserved stablecoin like USDC, potential access to the Fed and the Fed window, and then you're able to hold your reserves with the central bank. And so for us, that would be a very attractive option. There's discussion in the UK under the Financial Services Markets Act that's currently within Parliament to bring stablecoins within the perimeter of the Bank of England. So I think what we're starting to see is, again, harmonization globally around the potential importance that stablecoins provide, the potential for them to become systemic, which means, that they are even more important than, or they expect to become even more important, and then therefore should be prudentially regulated. And Circle agrees. So all roads align when it comes to potentially EUROC being regulated by the EBA.
All right. Anything to add, Joao?
Nope, I don't think so. Tina is the expert.
Okay. Very well. So I guess there's also not a lot of fear coming from a digital euro as a CBDC when it comes to becoming a money API. If we look at the plans of implementing blockchain technology or DLT of some type, or rather the lack thereof, right? So there's no real overlap. Or is there any consideration that goes into the landscape of digital money when it comes to CBDCs and stablecoins? Is that something that you guys look at?
Yeah, we look at that all the time, and I'm sure Joao also has some important views on this. I think from my personal perspective, we today have private and public money, and they are both used. And so when you kind of consider the context of a retail based central bank digital currency, that's kind of not how central bank money works today. But there is use cases and interoperability between public and private money. So I don't see why that would change in the future. I think a central bank digital currency will potentially serve purposes that are, designed to work well with that type of asset, and stablecoins will continue to provide the same type of services that private money provides today. So I don't necessarily see them in competition. And I also believe that there is a number of design questions that are still being contemplated around how CBDCs, might actually, be technically designed. And some of those explore options which aren't based on blockchain technology. And for me, I think if we're moving toward this kind of device on, payment on always and digitally native transacting environment, to bring a digital asset online that can't be interoperable or would provide a lot of friction with interoperability, I think would propose, some significant challenges and might lead to some lag in adoption. So ultimately for me, I don't think it's an either or. I think stablecoins today provide optionality, and I think they will continue to.
Yeah, if I can add a little bit to that, as Tina said, I think sometimes it's easy for large audiences to not appreciate how the scale that we utilize, to which we utilize private money today, right? There's a reason why there are tremendously robust and established e-money constructs around the world, right? That's exactly because the proliferation of all these different form factors for money, driven by private enterprises, just tend to be better for consumers, right? So it's great that there's still a lot of people in the world that don't benefit from it, but at least for us in the West, mostly it's great for us to be able to benefit from PayPal and Revolut and gift cards and Visa and MasterCard, right? And those are all private forms of money. I mean, they are electronic representations of money. There's cash and there's other forms of money. But I think the vastly most utilized from a consumer point of view are actually private. So there's no reason to think that all of a sudden now for blockchain, this is not going to be the case. And when CBDCs, if they ever come to fruition, they are going to dominate. I don't think that's the case at all. I would like to think that this is going to be, again, a lot more of a collaborative and cooperative kind of landscape. Perhaps it is the case that CBDCs are going to have a particular traction and suitability for use cases that are actually not retail, right? So, for example, maybe when somebody is building a euro-based stablecoin, they can contemplate that the reserves can now be euro CBDC, right? And so I think that relationship is much more likely to me than this sort of competition at the retail level. Honestly, I think it's tremendously hard for a government to roll out a product like digital cash and really attempt to own all venues of that. And I also think it's not good for consumers, right? Because an asset like USDC and any form of digital asset these days, in the way that it is programmable and mostly permissionless, and there are several other synthetic forms of USDC that have been created by developers around the world just by copying what we have done or wrapping or extending what we have done. I question whether, you know, a central bank would be comfortable with developers fiddling with the CBDC and expanding it. So they just fit like different use cases in my mind.
And absolutely, this is also our stance at the Digital Euro Association on kind of how these two interrelate or will kind of shape the future together. I think that was very, very interesting. I certainly learned a lot from both of you here. How can people reach out if they're interested in signing up for Converge, for example, learn more about EUROC, learn more about the development opportunities? You've said already that we can find these information on the website, but then do you guys prefer LinkedIn, for example? Are you also on Twitter? Feel free to tell our audience. They're probably gonna want to reach out to you. Have a couple of more questions.
Well, Converge, I'm sure you can get to it via the circle.com website, but there is a specific website for Converge, which is converge.circle.com. And you can get all of the information on speakers and the program, tickets, etc. It's going to be absolutely fantastic, and we would love to see everyone there. I can be found on LinkedIn, and I'm always happy to take questions. I'm also on Twitter at Tina Taylor. So my DMs are open, and happy to chat with any of your members if they have further questions. Joao?
Yes, absolutely. Double down on that invitation for this will be Converge will be a super relevant industry conference. You know, we as you can see if you go to converge.circle.com, the roster of speakers that we are proposing, you know, Vitalik from the Ethereum ecosystem, Danelle from the Stellar ecosystem, you know, and this is just the beginning. There's a tremendous amount of super interesting speakers over there from the 27th of September, again in San Francisco. I will be there. I think Tina will be there. So we will be happy to talk live to a lot of the folks here. And I tend in terms of channels to reach out to me, I tend to be a Twitter boy. So you can reach me on at Reginato, REGINATTO, my last name. I am pretty responsive on Twitter if anyone wants to reach out.
Great, thank you guys also for sharing all this information with us on EUROC and then money APIs in general. The audience was very, very responsive. I can tell you that, which is a very, very good sign. People were really engaged here, asked a lot of questions. So thank you very much for joining today's event. Also on behalf of the Digital Euro Association, should you want to become a fellow or an expert with the DL, of course, also head to our website to stay up to date with industry news, the launch of the newest Circle stablecoin. Let's see what we'll see in the future as well. And with that being said, thank you so much. I hope you have a great rest of the day, and I hope to invite you guys back very soon for possibly the next stablecoin or industry developments at Circle and otherwise.
Thanks, Sarah. It was a pleasure.
Thanks for having me.
Bye.